Morning, everyone. This is Brad Matheny. It's the 31st of January. This is a quick little update. I really appreciate all the feedback and comments I get. I got a comment today from a gentleman or lady, I don't know. And I'm going to share it with you guys because it touches on a very valid point. And that point is, in my opinion, planning expectations and let's call it revisions to my expectations and forward guidance with regards to what you guys will get from my videos. Now, I'm talking many days when I'm talking to you guys about these setups. I'm typically talking many days in advance as to what's likely to happen. Okay. So we're looking at potentially rolling price data setting up. I'm telling you about this deep V pattern. Well, let me go back. Let's go back. Let's look at the comment. And here's the comment. I've seen you do this about three times so far where you have a cycle. In fact, I think I have it over here where you have a cycle pattern and the trend clearly written in your research, gap potential, trend bullish, but you inverse your own research on your chart and interpret it as going counter to the direction the stock is currently trending. Why interpret it as opposite of what my research says? Well, my research also suggests that we're going to be moving into a broad. So here's the gap potential in bullish trending, in a trend mode, in explosive trending. So understand long-term bullish, price action is explosive, short-term trending is bearish or warning, meaning we're rolling over, be cautious. Long-term bias trending is still bearish. I've talked to you guys about this. This is a proprietary indicator that measures risk factors in the market. And we can still move sideways or slightly upward in a bearish bias trending. So when I look at this, the long-term trend is up, price action is explosive, short-term trending is warning. We have a gap potential leading into this potential rally pattern I talked about this morning with some gaps and a breakaway on Monday. Then we get this carryover crush, evening star, gap defender, and you have to be careful of these counter trends. So, for example, this is a rally in counter trend. This is a gap defender in counter trend. And maybe I'll highlight these counters in red or yellow or blue or something so you can see them. Here's a gap reversal in counter trend. This means it's going against the general trending. Currently, the way I would interpret this, if I were to just rank these as a +1, -1 for every bullish, bearish, and 0 for neutral, I would say I have a +1 here. I have a warning sign here. So let's call this 0, -1, -1. So I'm technically in kind of a bearish, kind of a topping pattern. Same thing here. Bearish, kind of a gap reversal, looking to roll over because of the fact that we're not clearly bullish biasing. We're not clearly short-term bullish trending, and we are long-term bullish trending. So +1, 0, -1, -1. Kind of makes sense to me that we're like looking for a top pattern. Now, additionally, when I come back over here to my broad term cycle patterns, which remember, there are these, which are the daily cycle patterns. We've moved past this top into this strength mode, okay, which was on the 20th, meaning we're moving to this top peak in a strength mode, moving now into this breakaway section, breakaway on the 3rd, which is next week. And we're moving now into this V bottom, major bottom, and peaking pattern, moving into strength around the 14th, which is just after the V bottom and the major bottom. Then we move into weakness and a major bottom on the 21st. So I'm interpreting this as, essentially we've moved out of this top. We've seen this top play out on Monday. We're consolidating into this breakaway phase. We're past the 23rd breakaway. We're moving into the 3rd breakaway. I see us as moving in kind of a topping sideways trend, and I'm trying to provide you with guidance for what's coming 2-3 weeks in advance. So be aware of it. Now, additionally, there are the weekly trends. Let me find them over here. So the weekly trends move us through this topping pattern on the 28th, which was just a couple of days ago, and move us into this peak on the 14th into breakaway. And then we move into this bottom. So here you see we have this major bottom on the 10th, this peak breakaway on the 14th. And then after that, we move into a nothing kind of a pattern here, moving all the way into, and this is March the 23rd, we end up with a deep V bottom in breakaway weakness. So we're going to be moving into this weakness cycle. Remember, these are not in order. These are in order based on the calculations of the dates here. So it's basically how these dates line up, not in date order here. So what we're looking at here again is if we play to where we're at right now, we've just had a topping pattern on the 28th and we're moving into our major bottom on the 10th, which aligns perfectly with our major bottom here on the 10th. So we're looking at a move into this major bottom setup here. Okay. Based on my cycle analysis, somewhere around the 10th, 11th, 12th, which remember the 10th is actually a weekend. If I remember right, no, 10th is Monday. We're going to be looking at a major bottom. So that's within 2 or 3 days of that 10th date. Now, what I was telling you earlier is that I think the question, I'll go back over here to the question, why do I interpret it as opposite of what my research says? Well, my research, I think, is clearly telling us that we're going to be rolling into a volatile topping type of a pattern. Remember, we had the top on the 28th. I'm going to come over here to daily. We had the topping pattern originally around the 23rd, 21st, 22nd, 23rd. And then we had that weekly topping pattern on the 28th, which was right here. I think we've gapped up through volatility. We've run into quite a bit of resistance today. Remember, we were just barely outside of that 382 to 618 range. And I see us rolling back down into this movement downward. But again, that's my interpretation of what's coming over the next 5, 10, 15 plus days. If you're going to be looking at this from a 5, 10, 20, 30 minute time frame, whereas you want to come down here to say the 5 minute, and you're going to be trying to trade the 5 minute chart instead of what I'm talking about is days, then yes, then this gap potential rolling into this topping pattern, just like I highlighted this morning, up into this 609, 610 area, is going to be critical as I think we're going to roll over and move on downwards. So I think this is a matter of time perspective. My research is based on daily data. So all of this, when you look at these cycle patterns, this is daily, okay, predicting what's coming on a daily basis. So, and this is predicting what's coming on a weekly basis, many weeks and months in advance. You can see I'm showing you all the way out to 2026 here. Major top on January 28th, 2026. Major top on April 20th, 2026. So I'm making these predictions, a year plus in advance. And what we're going to be looking at is moving through the strength and the weakness phases. And then we come back and apply that data to what we see here on the daily. And we then apply that data to what we see over here on the cycle patterns to try to get an idea of what's coming. Now, we want to go down to 2 minute, 5 minute, 10 minute. That's where we have to use other indicators and other features to try to determine what's playing. Gap potential here tells us that we had a very strong potential for a gap, whereas the long-term trend was up. Short-term trend was neutral or warning, indicating a potential that we could get into volatility or a rollover. Daily bias was bearish, weekly bias was bearish, meaning that in general, the market wants to contract based on this data. It's running into risk factors. It's not healthy for a rally. So where are we at right now? Again, we're up near these highs. We're rolling back down below this 609. We're at 608.90. You can come back in here to let's go to the 5 minute. And you can see we've kind of rallied up on this gap, carried over, and rolled back down. Personally, I wouldn't be surprised if we see the markets roll downward today. There's a lot of buying activity and try to target this lower zone. But I think it comes down to, sir or madam, I think your question comes down to perspective. I think it comes down to the idea that I'm talking about days and weeks and what the pattern may set up. And I was fairly clear this morning, highlighting that a move above the 609 area would be bullish. And then I highlighted a move down below, I think it was 606, roughly would be bearish. And that the markets were, to me, looked like they were topping, moving into that deep V low. I could be wrong. Remember, I've been wrong before. I'm not saying that it's that I'm 100% certain. So if I was 100% certain about everything and 100% right about everything, trust me, guys, I wouldn't be out here trying to teach you this stuff and show it to you. I'd be off on my gold-plated island somewhere, flying my gold-plated plane and my gold-plated silverware. I would be, I wouldn't be out here trying to show you how you can see the markets the way I do. Um, and a lot of people don't understand what I do. It takes some time to get a handle on it, and to get a handle of what I've been predicting. Now I've worked on trying to produce intraday cycles. Okay, so what I've done here, get rid of these Discord messages. What I've done back over here with the daily cycles, I have tried to create intraday cycles going every 10 minutes, every 5 minutes, and it's not as easy as you think. Okay. This whole process is related to finding, and let's call it an anchor point. Okay. Finding some point in time that is critically relevant to future data, and then basically applying the data to that, going forward to go ahead and generate these patterns. So once I have a fairly solid anchor point, then I can move forward. The problem with that anchor point is that on an intraday basis, it appears to change fairly regularly. So, going back and readdressing the anchor point changes as it modifies, means that what I have been telling you is coming in the near future may change. 20, 30, 40 minutes from now, we might get a new anchor point. And that means that we could have a changing structure. So intraday data is a little bit different in the sense that, what was 10 minutes ago may not be the same today or right now or 20 minutes in the future. So dailies tend to stay fairly consistent, and we can kind of rely on the same thing with the weeklies. And of course, I do a lot of other research. So, there's more to what I do than what you're seeing right here. You can check out my profile to learn more. But I wanted to talk to you guys about this because, you know, and I'm working on a couple new indicators. Can't show them to you yet for TradingView. And maybe when I get done with them, I'll release them as free indicators for everybody. But the whole plan here, as I mentioned to you, is to provide you some insight, provide you my interpretation, and then, like I said, try to get you guys to pick up on it, figure it out. Because my general rule is, I'm not going to tell you what to trade and when to trade. That's just my general rule. I'm not a broker. I'm not trying to make money off of you when you trade. I'm not getting commissions. That's not how things work for me. What I'm trying to do is show you what I know, what I see, what my research is telling you so that you can learn to make better decisions and hopefully profit from the market. And like I said, I get pretty good comments sometimes. This is a comment from someone who's been with me for a while, Marlene. She's a wonderful lady. Since I've been following you, I've consistently made better trades and I've been banking profits while minimizing risk and knowing when to minimize my risk. You are the GOAT, the greatest of all time. This whole thing started, the GOAT started back last year in July and August. I started calling the market and everybody was just all over, how do you do it? How do you do it? What do you do? And then I started getting some naysayers. Some people are saying, well, you're not 100% perfect. You don't really call the markets. You just tell us what you think. Yeah, well, if anybody could 100% accurately predict the market a year in advance, even 10 minutes in advance, 100% of the time, guaranteed every time, you know what? It wouldn't be trading anymore. It would just be give the guy your money and let him trade it for you. The scenario is that we don't know what's coming. We don't know the news. We don't know how it's going to interact. And what I try to do is provide you the best information that I can. If it's useful, wonderful. If it's not, I'm sure there's somebody else that's out there that's going to tell you what you want to hear. And good luck. I mean, that's kind of the way it works. So at this point, ladies and gentlemen, I want you to be aware of what I'm trying to tell you is that we are moving into this. I'll go back to 2 hours and I got to resize everything. And yes, my charts are cluttered with stuff, but I would not be surprised to see the markets roll into this lower level or this lower level, 604 to maybe 600 over the next 2 days in a downward cycle trend, trying to retest this support. But ultimately, I'm looking at this 584 to 588 area. I've talked about it before. And where we get that comes down from this historical support level way back over here, coming right across these lows. You can see it right here, right after the election, 584 coming right across. Here's clear rejection, broke through it, rejected, gapped up. I think that 584 level is the next target on this downside move when it sets up. Now, are we here yet? No, we're not near the downside move yet. But when it happens, back down to my deep V, I'm going to be looking at this 584, 588, or a little lower level, thinking that this is the target. This is where I think the markets want to try to go, especially moving into, now remember, this is looking forward. Moving into these deep lows. So we have that February 10th major bottom, okay, setting up. We have the March 23rd major bottom into weakness. Then we carry over that weakness all the way into May. And then we move into strength, strength weakness around middle of May. And then look at where we get into. Then we get into a July peak bottom, an October major bottom disruption and weakness. And then finally, we start moving into some strength around November, December. So I think the most of this year, the first 6, 7 months of this year, are going to be very rough for traders. A lot of volatility, a lot of up and downs, a lot of inconsistencies, no major trend. When you come back over here, and you look at the daily, we're moving into that major bottom around the 10th and the 9th. Then we get a secondary bottom on the 21st. Then we move through a period of moderate consolidation and a little bit of strength with breakaways and disruptions, moving into another bottom around the 21st. And then we have a secondary bottom on the 24th. This is where I think we're going to get our ultimate low over here in March, right around March 21st, let's call it 20th through 25th. And then we move into strength after that. And I think we're going to see a bottom. Probably, if I can show you, we have the So there's our bottoms. So I've done this before, and I'll kind of highlight this. So I know this is a month out. Okay, I get it. I'm predicting a month out into the future. All right, guys. Yeah, I get it. But I have identified this is a major bottom, this is a secondary bottom. So if we hypothetically play through my expectation, rolling through this excess phase peak pattern, rolling into that consolidation, maybe around the 584 area where we get our deep V. Well, let me do that again. So here's our excess phase peak rolling down into consolidation, deep Ving out of it, rolling up a bit into a deep pattern, rolling up out, trying to get out of this mode, rolling into a secondary bottom like this, and then up and out. So that would kind of be my general expectations. Now, we could end up here in this rally phase. We could get a lot of volatility and end up back up in this area. But this is the area that I think we're going to get, in terms of general trending. I think what we're looking at, again, I'll try to show it to you. Get rid of some of these arrows and lines. There's my deep V secondary. So in terms of general trending, I think that we're going to be looking at, a roll, a down move, an upswing, a down move, an upswing, a peak, a roll, a bottom, and then an upswing. And I think that's going to be the general type of trending that we're going to see, which is why, as you can see, I've highlighted the sell hedge over here, which is looking for this type of a top, the major bottom over here, which is again going to be a buy zone. And so we're basically looking at a buy zone here, trying to catch this little rally, a buy zone here, trying to catch this rally, a buy zone here, trying to catch this rally, and a sell over here, meaning that if you are invested, you should get out of any big investments right over here, probably around March 10th, or call it 11th, 12th, which again kind of plays back into these patterns here. Remember, we've got the 13th, the 12th, and the 13th here as a disruption breakaway in strength. That's going to be our peak, I believe. And then we move into this major bottom, shifting into weakness. And kind of the way I look at this, guys, let me come in here and do this so you can see. Wait for the editor to kick in. Okay. So why is this? Oh, keep active, come back here. Sorry, that's my other server. Why am I looking at that major bottom right in this area? And why am I looking at that 13th and 11th, 12th, 13th area as some sort of a peaking pattern compared to where I'm looking at this February? Oops. Yeah, it does that. February 21st as my secondary bottom, leading into this type of a mode where we're getting up into strength. So I see this area as bullish. I see this as just as it states, a major bottom for both of these cases. I see this area as moving into strength through this bullish phase near the end of February into early March. I see this moving still into a topping pattern. And then I see us move on the 21st towards this major bottom in weakness. So my thinking is that once we get to the 11th, 12th, 13th of March, in this area, we're going to shift into downward trending, which is going to move us over to this area. So we've got, here's our peak around the major top, peak, disruption, right around the inauguration, and then moving into strength. You see that? This is our top. We roll down, moving into strength, moderate strength, which is what's happened today. Now we're moving into this 9th, 10th V bottom, and we end up having a lot of breakaways, which means that we're going to get a lot of volatility. Disruption is like a news event, something outside the Fed or a banking crisis, or who knows? We don't know. Disruption is some kind of a disruption of the market. Breakaways are just, in my opinion, volatility. So when we get to this peak bottom here around February 10th, where we get the peak and the major bottom, to me, that means we're going to get, markets are probably going to be moving into this downward trend, spike up, move into a V bottom, and roll out of it like that, kind of a V bottom. Then we get into a major bottom. That's this V bottom right here. Then we get into this major bottom on the 9th, and then we get into a major bottom over here on the 21st. So it means that we're going to get kind of a spike, come back up, major bottom, come back out of it, roll up to the 21st, and then get a secondary bottom. That's why this level, the 21st, and this level, the 10th or 11th or 12th, because that's a Monday, to me gives us this multiple bottom cycle. Okay, then we move into the March 21st bottom right here. And through this entire disruption phase, through the breakaway, through the disruption here, into moderate strength around the 12th, means that we're going to see the markets roll back up into the 11th, 12th, 13th, and then whoops, roll back up into the 11th, 12th, 13th, and then roll back down. And I believe try to set up the ultimate low right in this area. So I think this is going to be the ultimate bottom, the big bottom, leaving us to roll back out of this into April, May, June. Now we come back out of here and get back over to my data. Let it load and drag way back over here. And now understand that where we get into that March V bottom right here aligns perfectly. And then we move into weakness at this point. What are we moving into? After this March area, the only other area we have here is this May 15th disruption in weakness. And then we have the May 9th moving into strength. So theoretically, after this March 23rd area, we're moving into moderate strength, where around early May, so call it May 9th, 10th, 11th, we may move into a disruption period with weakness, followed by a move then into July, where we get more volatility with a breakaway, a peak, and a major bottom. So we're going to be looking, and I can draw this all out for you, what I think is going to happen. But again, what I think is going to happen 6, 7 months from now is somewhat irrelevant, because the market's going to do what the market's going to do. And that's what I try to do. I try to update my analysis as we go to tell you what's taking place and show you what's taking place so that you can use the information efficiently. And I'm coming back over here to check on the markets. Yep, rolling downward. Let me get rid of this. Rolling downward a bit. It's rolled back below the 609 area. Looking for the markets to really try to break downward here. I think that this is technical failure of trying to rally. We'd have to get above this 609.93, 610 area. And again, coming back over here to the hourly, where we're at with this hourly chart is kind of interesting in the sense that I drew this flag earlier, a couple days ago, this excess phase peak. You follow my research, you'll know what an excess phase peak pattern is. But again, playing along with the data, which is what I do, I try to just follow the data. We now have a very clean flagging formation running right across here, off of this high now, looking to roll down. We've rejected off of this previous high. It's very important that if we reject below this previous high level and we do then get down below this 602 level, then we are looking at that move here. I'll change it right here to a darker color. We are looking at a breakdown potentially setting up, which is the next logical phase of this, to move down into this area and into potentially this area before, and I'll have to redraw that, but before we get down into that ultimate deep V pattern. So we're looking kind of like something like this with the deep V. Okay. Now, again, 570, 580, 582, maybe. This is my deep low pattern based on that critical support level way back over here. Okay. Will it happen? I don't know. I think it will. I think it's got a very strong potential to get down there, simply because we were just there before this rally. This would be a good solid double bottom. Secondarily, we have this gap window to fill, and we have this major support area right here. So this 594, 592, 593 area makes a lot of sense to me. This also, this 584, as I mentioned earlier, area makes a lot of sense to me. I'll mark it here as potential support. And again, I'm highlighting these areas so you can see what is coming potentially. So we'll see. At this point, this will be a good, and that's the reason why I do all these videos. Honestly, I do these videos because I want to know how my stuff is going to play out. And the best way for me to prove if I'm right or wrong is to record it in a public space on TradingView so that my research will either live or die as right or wrong going forward. If I'm right, people are going to follow me and they're going to follow along and they're going to try to use my information. If I'm wrong, 100% of the time, no one's going to follow me. Okay. So, you get the idea here is, what's going on. And the whole idea is I'm not out there trying to, tell you that I'm right or wrong all the time. I let my work speak for itself. You know, like I was telling someone the other day, a lot of you guys don't remember, but you guys remember when oil collapsed below zero? You guys remember that? It was about 4 or 5 years ago, maybe a little longer, right around COVID. Um, you guys, if you do remember that, I'm sure some of you do. I predicted that 7 months in advance in a research article with my old friend and partner. I predicted it almost to the week. My prediction, gold was trading at around, I think, like 55, $65 at the time, maybe a little lower, 48, 50, somewhere around there. And I predicted, not gold, oil. And I predicted oil would go down to 12 to $14 on the week. I think it was May. If I remember right, it was May. And anyway, long and short of it, oil went down to 13 or $14 and then just kept going. I wrote that it would be a huge, massive anomaly, like 5, 6, 7 months in advance. And no one believed me. Everybody wrote, was writing messages and like, how can you say this? This is ridiculous. Oil will never do this. It is never going to go down to 13 or $14. You're crazy. You know what? 7 months later, oil went to negative numbers. And I called it, like I said, 7 months in advance. And no one believed me. But after it did exactly what it did, everyone started paying attention, saying, what is this guy doing? How is he able to see this stuff? How does it work? And I'll show you a little bit more right now if I can get it to work. This is my server, and it's slow because it's doing a lot right now. But this is my predictive modeling page. Let me try to get it. Okay, this is my Fibonacci, which is full scale. And it's off the chart, which is fine. I don't care. Trying to get to another chart, which is hopefully this one. Oh, there it is, ADL modeling. So this is my ADL modeling system, right? My predictive modeling system for, we'll stick with the ES. And what we're going to do is we're going to go down here to, let's go to 2-hour data. Let's see, I don't think it took it. This is eSignals, another application I've been using for a long time. And what I'm going to do once this loads is I'm going to ask it to tell me what it sees happening in the future. And what this does, guys, is this pulls data. Once I get the data, this pulls data and maps it out in what I call a scatter chart format. And the scatter chart format gives me the ability to map out critical data. Yeah, this may not work. I was hoping it would work, but we'll see. Like I said, this is a server that runs pretty intense. So we're using up 63% of memory right now. It hopefully will load. Just put it in again. Anyway, what I can do with this is I can ask it to plot. Let me see if I can get something here. Oh, finally it loaded. Okay, so let's just forget about that and get rid of this so it's not an error. Come on. There we go. Good. So now what I can do down here, guys, is there it goes. It's finally loaded and I can ask it for data. So what does it think is going to happen in the future? Watch this. I'm going to just start clicking on bars, waiting for it to respond. It's going to take a while because it's busy. Normally I do this after market. Hopefully it won't crash. And we'll wait. There we go. Start getting some data. Perfect. Now, this is predictive modeling. What is predictive modeling? How can you use it? I want you to realize that predictive modeling on a 200 or 120-minute chart every 2 hours is predicting that we have a moderate chance that we're going to move up into this 6160 area right up over here. But what I look for are more clusters of data. So you can see that we're looking at a move downward into this 6090 area. And again, this is going to be, Monday, probably Monday, Sunday, Monday. And then as we move into this area back over here, once the mouse responds, here we are on the 3rd. We're looking at a moderate chance that we could be a lot lower. Could end up being down here in the 60-20, 60-30, 60-40 area. So if I were to give you my interpretation here, we're likely going to come down into this area. We're going to likely move down into this area, down into this area, rolling potentially down into this area, and then we'll have to see what happens. So where does that put us on the SPY? If you look at the SPY, and let's say this is 610, 609 up here near these highs, and we're dropping 100. We're dropping 100 points. That would mean about a $8 to $10 downward move in the SPY, and an $8 to $10 downward move in the SPY would put us from 610 down to about maybe 600, 590 in this area by middle of next week, which again is leading exactly into my expectations. So it's not just the patterns. There's a lot behind what I do, and I want you guys to kind of figure this out. So anyway, 40-minute video. Didn't mean to go this long, but at least I'm showing you about what I do. And remember, there's even more. I mean, literally, there's more to what I do than what I'm showing you right now. I could spend 3 days or probably 3 months trying to teach you what I do in the background and how I try to interpret this stuff. And again, you guys all want to trade, intraday. Well, I have those things too. I don't show them to you in these videos. I can't, because it's proprietary, and it's not allowed for me to show these to you in these videos on TradingView. Okay, guys, thanks for your time. And again, my rabbit hole is deep. It keeps going for a while, guys. All right, guys, talk to you later.